Hello, traders. It's been a while. It is Thursday, February 9th. We are about 3.5 hours into trading. I am trying so hard to get these videos out, and I have failed miserably. My last video was on January 26th. That's almost 2 weeks ago. Next week, you're going to see two videos. And then from that point on, I'm going to do at least two videos a week. Maybe I'll even start doing my Sunday night videos again. I have been so consumed by these trend lines that I haven't had time to do anything else. But the good news is that you're going to see them in action today, and I should be releasing this product in the next week or so. So let's take a look at the last pick, which is Adobe. My market bias at the time was bullish. My market bias right now is neutral to slightly bullish. I like what I see. I'm going to get into that in just a bit. So on the 26th of January, the stock was just starting to poke through this resistance level and the 200-day moving average. I liked everything that I had seen. It was demonstrating some relative strength, and we could see that right in here. So it looked good. And that was approximately $365 was the price level at the time. The stock is currently at $380, so a nice trade. So let's take a look at the market. Currently, got a very choppy market. We'll get into that in a moment. Pretty nasty gap reversal so far today. But let's go into the daily chart. That's always where we like to start. Market first, market first, market first. Let's zoom out. We got to get that longer term perspective. Here's what has me fairly bullish on the market. You can see that we have this downward sloping trend line that comes into play right here. And that has been breached to the upside. So it's a little bit more difficult to see, so let me not zoom out quite as far. You can also see that these are the major moving averages. This is the 50-day moving average in the light pink line. The heavier pink line is the 200-day moving average. We have a golden cross. That is when the 50-day moving average crosses the 200-day moving average. Pretty widely used form of technical analysis. What it means and how it works, it's meant to discourage bottom picking. The way that this occurs is that the 50-day moving average has had plenty of time to recover itself, and you are not going to get a golden cross until there has been a bottoming process. Well, we've seen that now, and that's one of the other things that I currently like in the market is we have a higher low double bottom. That's also encouraging. I'm not a big follower of cup and handle, inverted head and shoulders, but you can see an inverted head and shoulders formation right here. And the neckline is roughly coming through right about like that trend line that I drew earlier. So we have a breakout to the upside as far as that's concerned as well. Am I saying that this is gangbuster, gotta have it, back up the truck? We got to get long here time? No, absolutely not. There are still plenty of dark clouds on the horizon. The Fed couldn't be more hawkish. That's exactly the rhetoric that we got last week. That's the rhetoric that we've gotten this week. They are going to be raising their Fed funds target rate higher than what the street had been expecting. Market didn't care. They actually view that as somewhat bullish. Earnings came out. We had more news Wednesday, Thursday, Friday of last week than you're going to see in any other 3-day time span. We had Apple, Google, Amazon all announcing earnings. Certainly this market was going to break one way or the other. It really hasn't. We are at the same level that we were a week ago. And the earnings were underwhelming. The guidance was underwhelming. Companies are cutting headcounts. So with all of this negative news, why would I be, neutral to bullish? What justification do I have? Well, I'll tell you that if you try to rationalize the market from a fundamental standpoint, you're going to drive yourself nuts. That's why I rely heavily on technicals. The technicals tell me what the money is doing. And right now, the money's not too afraid that the bottom is going to get yanked out of this market. So I'm not afraid that that will happen either. Back in here, when you've got this swift and deep selling, yeah, we had the pandemic that we were dealing with, the shutdown in China. We had the Fed raising interest rates at a pace that we have not seen in decades. Could this create some credit problems? You betcha. But most market rallies start before the darkest economic hour. And that's because asset managers don't look at the market today and go, is the market going to be higher tomorrow or lower? That's what we do. We're traders. We're very short term oriented. So we're in and out of positions all the time. Instead, asset managers are asking themselves, do I feel that the market is going to be higher than this level a year from now? If the answer is yes, then they are going to start deploying capital well before you start to see a turnaround in economic conditions. By the time the economy turns around, the market is already off to the races. So I think you're starting to see some buying coming in right now. And that's good news because in the last year, with this type of market volatility, and when I say volatility, I don't mean, gee, the market's going down, I can't trade this. Yeah, we can make money on the short side. What I'm talking about is it's down huge and then up huge, and then it's down huge and then it's up huge. And this is all taking place overnight. Some days we had a 60-point S&P drop. Then the next morning we got a 50-point gap up before the open. That is incredibly difficult to swing trade. And with gigantic intraday moves of 100 S&P points, why would you even bother swing trading? You wouldn't. That is a day trader's dream to have that type of volatility, and you don't need the overnight risk. But right now, we're finally at a point to where I'm seeing some signs of stability. I feel that the low is pretty secure. Yes, we could test this level, no question about it. And any dip that we see is going to be a buying opportunity. That's how I'm going to be viewing it. So let's talk a little bit also about the resilience that we've seen in the market and what we've seen just recently. So we had this downward sloping trend line coming in like this, and we broke out above it. What happened after that? It got spanked down, and I mean hard. Look at these long red candles. We'll zoom back out so you can see them better. So when we tested that breakout, that is what happened. In one day, we fell back below that downward sloping trend line, that high minus. Okay, that's bearish. And we took out the 200-day moving average. Whoa. And we took out the 100-day moving average. And we took out the 50-day moving average. That is a smackdown. That tells you that sellers are saying, not so fast. We didn't get any follow through off of that. And you can see really nice price compression in here with a much higher low. This is a sign of buying. And you didn't see a couple of positive days and then the bottom drops out again. That's what we've seen back in here. Nice rally, and then every little bounce was faded. Now we're actually seeing the opposite, where this is deemed a buying opportunity. So what happened when we just cracked through that downward sloping trend line this time? Did we see more selling? Whap, 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 to tell us that sellers are there? No, we didn't. We stayed up nice and tight to it. And so now I believe we're probably going to be staging for a nice little breakout. Will it happen right way. We've got the CPI next week. That's the next potential speed bump. I hope the CPI creates some selling pressure because I am looking to get long and sell more bullish put spreads down here around the 200-day moving average. I feel that the market is numb to all this inflation news. It has a very temporary impact, an important impact, obviously, for day traders and overnight swing traders. Yeah, it's important. You have to navigate around those numbers. For a longer term swing trader with a 2 or 3 month perspective, heck no, I think that's going to be a buying opportunity. So I'll be watching for that. Consequently, in today's video, and I'm going to get to it right now, we're going to find a pick that I like. We're going to go through a couple of searches. I'm going to conclude this video, keep it relatively short. We're going to put that 5-minute chart back up so we can see what's going on here. Talk a little bit about what we had today. These mixed overlapping candles are not particularly strong. This is a gap reversal. So yesterday we have this crazy day back in here. Tuesday was just absolutely nuts. Volatility like I haven't seen in a long time. And this was not even the FOMC announcement. This was just Powell speaking at an economic conference. But you can see the initial reaction, then the big drop, and then follow through. This is buyers and sellers being extremely active on big volume. And so the comments were hawkish. So initially everybody was like, yeah, yeah, go, go. And then, oh no, this is actually hawkish. And then the market rallied anyway. So my take on it is buyers and sellers are very much paired off. They're doing battle when you see heavy volume like that. When you have the volume, you can trade these moves and these reversals. When you don't have the volume, you have to expect lots of chop like this. Mixed overlapping candles, sideways movement. You have to be very cautious in that type of environment. But yesterday the market gapped down and then it steadily lost its steam and the selling pressure started to build near the close. We had a gap up this morning, nothing to justify it apart from, gee, the market was down yesterday. And so the first 3 bars today told us that we needed to be fairly cautious on the open because we were seeing instant selling pressure and there was a good chance that this gap might fill. This is somewhat of a selling climax in here. You can see if you draw the lower trend line connecting the lows, you're going to poke through it. Typically, and this is a downward sloping channel, there's the upper bound of the channel, there's the lower bound of the channel. Now you're more likely to poke back up into that trading channel. I would be more inclined to think that the lows for today are in, but I'm not going to stick my head in that noose until I start to see more than just a couple of green candles. This has to be a bottoming process because we've had a pretty heavy dose of selling and a gap reversal. So as OneOP starts to come in and it looks like we're going to get a bullish cross in here, I'm not going to trade that bullish cross. What I want to see is a probe of support that turns into a bullish hammer, long tail underbody, and then maybe a nice long green candle that bites into some of this red candle, at least through the halfway point. So if we start getting back above SPY 411, and if we do it in pretty quick order off of that low, and I have the start of a bullish 1OP cycle, yes, then I have what I want. And here you can see that was a nice bearish cross that we got on 1OP early in the day. And we've just been in that bearish cycle the whole way down so far. So we'll see what happens. But as far as trying to put on a bullish trade, this pullback actually might help us. So let's take a look at some stocks. I'm just going to flip some charts. I do want to mention to you that the view that we're going to be using for the trend lines, we are using a semi-log scale. The other thing is that we're going to only be looking at current trend lines. What does that mean? That means that these are breaches that have happened in the course of the last 10 days, or we have active lines that are currently within 5 ATRs, meaning that the trend line has not yet been breached. And I'll show you some examples of that. Let's go into Win. Here is Win. That is a nice long-term uptrend line. This is what we call a high plus. Earnings after the close yesterday. Nice gap up. It's been able to hold the gap so far, but we would like to see follow through to the upside before we take a position on that breakout. Given the market weakness today, stock is struggling a little bit to do that. Let's go down to the next one, CRM. You can see that's got a downward sloping trend line right in here that's going to provide a little bit of resistance. Would I avoid taking the trade because of this line? No, because I've already got a couple of nice trend line breaches here. There you can see one right there. You can see a longer term one back in there. So yes, we have a nice trend line breach to the upside. This is bullish. I would love to see us get through that because that would give me additional confirmation. CRM looks pretty good. It's got earnings coming up on March 1st, so we do have a few option expiration cycles that we can go through. If we were looking to sell an out of the money bullish put spread, I would try to get down below this 200-day moving average, but that is too far away to get any kind of decent credit with only a few weeks to earnings. But yeah, I like CRM. I think that's going to be nice. ABBV. This is heavy selling. This is just an oversold bounce as far as I'm concerned. Tested the 100-day, fell back right away. Tested the 200-day, that's starting to slip. I would have no interest in trading that. Not right now, anyway. The stock is going to be trying to get through this downward sloping trend line right now. It's also trying to get through this horizontal resistance right here. So not of huge interest to me either. And here we've got MGM. That actually looks pretty good as well. So this is an instance where, yes, we could sell the $42 put. That was the prior resistance level, now support. We have two trend lines here. Nice breakout. We also have another older trend line here. We'll zoom out and take a look at that. You can see this is an earnings reaction after the close. Given the market pullback, stock is holding up pretty well. So let's zoom out. We'll take a look at where those lines have come from. And you can see there are some of the connection points that we have for those trend lines. Very useful tool, and we'll be able to search for these trend lines as well. That's where it gets very interesting. AZN, not seeing a whole lot there. You can see this nice gap up and a pullback. Why aren't there any trend lines? This would be a very steep trend line. The steeper the trend line, the less reliable the trend line. So no, there are no current trend lines drawn there. Let's take a look at Sono. I like Sono. I like the fact that the stock has been on a very nice, steady path higher since last September. If we wanted to, we could actually put an overlay of the QQQ just to see how it compares to Sono and whether or not Sono has had some strength relative to the tech sector. And you can see the tech sector has gone gangbusters recently, so it's a little bit slow in picking this move up. But look at what the stock has done during a time when tech stocks were very, very weak. It had consistently been on a grind higher when QQQ was doing all of this. That tells me that long term, there are buyers in this stock. It's also not super volatile, so it sets up well for selling some naked puts. When I sell naked puts, my goal is to acquire the stock at a lower price. You can see here that earnings were announced after the close yesterday. That is a beautiful breakout, and look at how well the stock is holding up given this market bloodbath right in here today. When I say bloodbath, that's not really fair. It just basically gave back the gap up this morning, and now it's floating around at the lows from yesterday. So, but the point is that the market price action today has been very, very negative. If This move were all fluff. And the gap up were fake. Just some short squeeze, some short covering. You would have seen profit taking right away on the open. Blam, 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 blam. Knock that baby down, play whack-a-mole with it. The fact that it's still up here holding its gains tells me there's big money that wants in on that stock. So I want in on that stock. So how am I going to accomplish that? Well, I would not mind owning that stock right here at the $19.50 breakout where it was earlier today. So I'm going to sell a $20 put, which is out of the money by about 75 cents or so. So let's take a look at where those are currently trading. And then I might have to conclude the video because this is getting a little bit lengthy. So there's Sono. I'm going to go out to the March expiration. March 17th, so that's a normal option expiration cycle. And you can see that the $20 puts are 62 cents bid. So I would sell the $20 puts for 62 cents. That makes me obligated to buy the stock at $20 if I'm assigned, which I'm okay with, but I get to apply the 62 cents. So I'm actually long stock somewhere in the $19.38 range. Good. I'd like to own it at $19.50 where that breakout was right in here. I'm happy owning the stock there. They've posted earnings and the market loved the earnings. I believe this stock is going to go higher. Well, Pete, if you think the stock's going higher, then why the hell are you selling puts? Why aren't you buying some stock? Because I feel there's a decent chance that the market is still going to be waffling around and it's going to have some aftershocks. Maybe the CPI causes a little bit of selling. Why not play it safe and try and buy the stock cheaper? Well, what does this possibly yield to me in terms of return? Well, if I'm selling a $20 put, I have to put up 20% of the strike price, roughly, in margin. Varies firm to firm, but that's an exchange minimum margin requirement. So I have to put up $4. I'm collecting 62 cents. That's about a 15% return in about a month and a week's worth of time. That, to me, is a decent return. And if I could do that 8 or 10 times a year, I'd be a very happy camper. So that's a nice trade. But I want to own the stock. If you want to own the stock, selling out of the money naked puts is a great strategy. So that's what I'm going to be doing a lot of. I'll also be selling some out of the money bullish put spreads. Market dips should be bought. That's my viewpoint. I expect market dips. I want to buy market dips. I want to add to my exposure. So ideally, market dip, sell a bunch of bullish put spreads. 2-3 weeks, click buy, market's still relatively flat. Bullish put spreads expire. Market has a little bit of a pullback, gives me another opportunity to enter. In maybe 3, 4, 5, 6 months, corporations will have had a chance to grow into their valuations, their profits will be better, and then perhaps I can get more aggressive and instead of selling out of the money bullish put spreads, I can buy some call debit spreads that are longer term and get into more aggressive strategies. But right here, right now, this is a good time to use this strategy. So I'm going to be trying to focus my videos more on swing trading. That's what I've tried to do over the course of the last year or two, but I've told you these are really good day trades, maybe an overnight swing. Now I'm going to be shifting gears a little bit and trying to give you trades that can span 3, 4, 5 weeks, looking for some really solid stock plays. And the new trend line feature is certainly going to help me do that. So let's just click through and let's take a look at a few other stocks that are currently on this heavy buying list today. We're just going to flip through. We're going to take a look at where these trend lines come into play. Disney, there's currently nothing active right there that we want to take a look at. Here we've got Pepsi with some support in here. If those were breached on the downside, that's why they're red, they would be bearish. Don't have anything really in play on the upside. Stock has resistance at the 100-day, may not even be able to hold that 200-day. So now there's nothing particularly attractive in that stock. I don't see anything there. I don't see anything there. This is a sign of resistance. We are near a 60-day high. So this is a nice move. Trend lines, the temptation is always buy the breakout, buy the breakout, buy the breakout. Well, this is resistance. So if we get a breakout to the upside and then that breakout fails, we're also going to know about that because those failed breakouts are an excellent shorting opportunity. In fact, I highlighted one of those yesterday in the chat room, and Google we can take a quick look at, and I can demonstrate. This is just nice stuff on BP here. There's earnings before the open. This is a major breakout with follow through. I looked at this yesterday, but I did not trade it because CVX and XOM, both energy companies, were down. So this has got to have some type of news within the overall company because the sector has actually been a little bit soft. CZR, that's another gaming stock. MGM looks much better than this, and Win also looks better than this. LAC, kind of a choppy, volatile stock near the upper end of the range, trying to break out. Let's see where this comes into play. Yes, this could be a pretty nice breakout to track right in here. So maybe one other search and then we'll take a look. I'm just looking to see if there's anything else that's moving well today. Tesla had a recent breakout. That's a nice little breakout there through the 100-day moving average, got room to the 200-day. Usually when you get watershed events like this, just big sell-off, then you're going to get a big bounce back. And yes, we had lots of trend lines all in here, coming in here, just carving this thing up, saying short, 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 short. And then eventually, as you got down here, some of those trend lines were breached, and then you had a reversal back above that downward sloping trend line. That's what we call a low minus bottom. And when you get those, especially after a steep descent like that, whew, look out. That is going to be a wickedly good bounce. We're going to be looking for a lot of those. So let's take a quick look at Google and then we'll call it a day, knowing that I am going to do 2 videos next week. So yesterday in the chat room, I had mentioned to everyone that we had Google trying to poke out through this resistance level. And there were a number of trend lines coming into play. You had earnings after the close a week ago, and this nice green candle in here. And then all of a sudden the stock pulled back. Not to worry, we've got this long green bar right in here that is trying to challenge the high post earnings. Couldn't get back there. Okay, well, maybe the next day. Oh no, the next day was yesterday. Yesterday, we took out the open of this key bar. And a key bar is something that I created within Option Stalker. We're looking for a really big range in the high minus low. We are looking for very small tails and wicks, meaning that the body of the candle was very, very large, and we're looking for high volume. They're easy to spot within the chart. And the way that we use them is in this key bar, you stay long until that open is breached, and then you flip short side. So typically you want to be going with these long red key bars here, and then now you know you have a reason to actually be long. What that told me yesterday, this price action, was that this was extremely bearish. And to get short, we had a chance to get down to the 100-day moving average very, very quickly. And so you can see that once you have these failed breakouts, everything looks great. The trend line's breached and it reverses, especially after a decent sized move like this. the potential for a nasty little backside is there, and those are going to be equally effective trades. So enough blathering. Let's take one more look at the market. I like what I see. You can see what I was talking about. We got a little bit of a base forming in here, still some chop. We got some wicks. We have some tails. We have a bullish 1OP cross. So at this particular point in time, right now, I would be saying I'm getting more bullish, almost bullish enough to take a position, but I'm not there yet because we have not seen that release, and I want to see that confirmation. I want to see that long green candle that closes on its high. The volume today is still relatively light. We got a little bit of volume in here on that cleanup, as it's called. So I'm going to respect that. I'm not going to be out there going gangbusters trying to pick a bottom, but I do think that there's probably going to be a tradable low in here. This decline was not all that strong, and we know that because we had lots of overlap, lots of mixed candles until this. Okay, so this is substantial. That was a big move. That was, gosh, probably about 30 S&P points. I'm going to respect it. So if I start to see some nice long green candles stack in here, I don't want one. That would be a solo. That would simply be a short covering rally that can be easily smacked down. I'd like to see a couple of them. I'd like to get through that 411 area. Then I'd feel pretty good about it. And then I would be long on the notion that this was not that strong of a drop and that buyers and sellers have been very active recently. You just have to wait your turn. And when you do that, you're ultimately going to be on the right side of the trade once the momentum in one direction stalls and holds, you're likely to go back the other way. Thanks so much for watching. If you know traders who are more swing traders than they are day traders, spread the word. You're going to see a couple videos per week out of me, and I'm going to be highlighting these new trend lines, and I hope to have them released next week. Thanks so much for watching. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.